Hello traders, Gary Wagner with the Gold Forecast here. It is Friday, November the 19th, as we say in Honolulu, Hawaii. Happy Aloha Friday. This is the Daily Reports Weekend Review. As we go into the close of this weekend, we have gold trading mildly lower, down about $1 to $2, currently trading at $13.51, $13.52. It does appear, at least tentatively, that the 61% retracement 1356 is causing a little bit of resistance, and that's right in this area. We, of course, talked about that yesterday, and we have been able to take that out, as you can see, on 2 bars, and of course on a 240-minute chart, that's a 4-hour bar, but also on 2 4-hour periods, it was not able to take that out. So with about 2 hours of trading left, we'll just have to see how this market wants to close. If anything, today's activity, this week's activity, has shown me that in terms of an interim and longer term outlook for gold, I remain committed to be very bullish. Of course, I believe the big news of the week was that as we saw this market retrace from this new historical high, 1424, if you recall, traders, once we got this black candle and we started to see the beginnings of this possibly being a star in here, you know that we got very excited because what we were looking for was that 3-river morning star pattern that we have seen so often at the bottom of waves and at the bottom of retracements, meaning a subwave within a wave. We, in fact, did get that the other day. We did issue a long recommendation to purchase and go long in this market. We're right in this area here. We're simply at about the close of where we were, 1353, call it, it's at 1352.93, and as I say, it is going into the close, so we'll have to see how it does close. But for my subscribers that have been following me for some time, you know that this is a pattern that is not a simple occurrence, meaning it's not an occurrence that we have not seen before, and we have found it in many occasions. This is that unique 3-river bottom. We've got that combination here, that combination here, here. Of course, here we made that play. That was a couple of weeks ago, and now again here. So it's quite obvious that at the bottom of the market, those 3 particular candle types configured exactly in that way, causing that variation, have been very, very strong bottom indicators for us, and we went ahead and took that call yesterday. Lastly, today I want to talk to you about the Elliott wave count. As you know, I use Fibonacci candlesticks and Elliott wave. I combine all 3. Elliott wave is as much of an art form as it is a science. And as we get new information, we always have to check, double check. And as you can see, I've absolutely revised what I believe is a correct or current wave count. My belief at this point, and we will have to see over time if that is correct, is because when this market came down here and did not make a lower low, I had to believe that the end of 3 was not complete and that in fact we had what's called a complex wave consisting of a subwave, or what's called, according to Elliott, a minor wave. So I therefore am putting this as the top of 3 and not 5. This last retracement is 4, and it is now my belief that we are currently in wave 5. Now, in terms of the picture itself, realize that if this wave goes up and then comes down and makes a new low, it tells us that that in fact was incorrect, because then we would have our correction. However, if we take out this high right in here and make a new high, then in fact that will confirm that this is the 5th wave. Realize, traders, that as we work with this, as information comes into me, I must always be open to the fact that with new information, I am able to draw a conclusion that allows you, my subscribers, to be more profitable and better traders. I will always acknowledge when I am working with something and I believe that I have some insight which changes my fundamental assumptions. None of those have changed. I'm extremely bullish. We have been buying the dips of these waves. We have been selling the rallies. But I do now believe that we could see that high that we first talked about, whether it be 1488, but we might in fact rally up here and continue to higher ground. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you on Sunday for the daily report. Bye-bye.